Michael, I usually don't do this, but I'm going to go LIFO, FIFO on you, which, you and I studied in school. LIFO, FIFO is back, and that means inventory's out the door. Target's one of the best run machines we have, the Swiss watch of inventory management. What are you learning about all of retail's inventory agony from Target?
The retailers have done a really good job in 2022 realizing that they made a mistake and working through it. This inventory issue really hurt a lot of retailers in 2022. Just about a year ago, everyone was pulled up and they got really over assorted, particularly trying to bring in inventory early in front of the supply chain issues that we had last year. And everyone just got over assorted. That was a big problem, but the retailers realized it quickly right around March or April of last year and aggressively moved market down. And it was a tough year for a lot of the retailers, but I think they got it done.
You make clear in your note, you look at it as a pandemic one-off and that Target and others will return. You raise your price target on Target a couple days ago, price target on Target a couple days ago. I got that out. But Michael Baker, what's the timeline where they clear the inventory challenge? Is it now? Is it into 2024?
No, they did it. Their inventories in the quarter just reported as of this morning were it was either up or down 3%. I have the press release right here. It was essentially flat. 3% down 3% at the end of the fourth quarter. At the end of the third quarter, we were up 14%. Mid-year was, I think, 35 and 45% growth. So they really succeeded in clearing out those inventories, and they start 2023 clean.
Michael,
so that inventory issue is now behind them. It's no longer an issue.
I was looking at some of the headlines as they came across after the earnings dropped, and I was pretty confused. They seemed pretty negative, and they also seemed kind of motley. Looked at an earnings drop, a profit drop of 43% in the fourth quarter, a forecast that came in under expectations. The shares are now higher by 4.6%. Yeah. How do you make sense of this?
Yeah, it doesn't surprise me for two reasons. Three reasons you keep in point to. One, this is exactly what happened with Walmart last week. Walmart reported a beat in the fourth quarter. Gave guidance that was below consensus and arguably conservative. The stock opened down in the pre-market and then ended up being up. It's exactly what we're seeing with Target right now. I think the idea here is that margins are going to be better. Margins will hit their low in 2022, and they're going to be higher in 2023. So the analysts got a little bit too high in their estimates. I think the consensus estimate for next year is 5.3. We're at 4.7. They guided to something that'll be around 4.5 to 5 or so. That's up from 3.5 in 2022. So that's a good number. We're growing next year. We're just not quite growing as fast or recovering as quickly as the consensus estimates wanted. But two things. One, those consensus estimates to me are probably conservative. And secondly, we're heading in the right direction. 2022 was the trough for Target. 2023 will be better, and 2024 even beyond that. It might take a little bit longer than the consensus forecasts had, but to me that's just a function of the analysts getting a little bit too aggressive here.